Hello everyone, welcome back to Shabanverse. Today, we have a major development coming from the United States that could have a significant impact on the future of cryptocurrency and digital assets. President Donald Trump has met with some of the biggest names in the crypto industry, prediction markets, and traditional financial markets at the White House. The meeting brought together SEC Chair Paul Atkins, CFTC Chair Michael Selig, and executives connected to major companies including Coinbase, Ripple, Gemini, Polymarket, Kalshi, Nasdaq, the New York Stock Exchange, CME and DTCC. And this is important because the meeting comes just one day before the first official session of the CFTC's new Innovation Advisory Committee. According to the CFTC, that committee's inaugural meeting on August 20th is focused on crypto assets, artificial intelligence, and prediction markets. So, what exactly is happening? And why should crypto investors, Bitcoin holders, and the wider market pay attention? Let's break it down. First, why is this meeting important? For years, one of the biggest problems facing the American crypto industry has been regulatory uncertainty. Crypto companies have repeatedly argued that they need clear rules. They want to know which digital assets should be treated as securities, which should be treated as commodities, how exchanges should operate, and what rules should apply to tokenized assets. At the same time, regulators want to make sure investors are protected and that financial markets remain safe. Now we are seeing something different. Instead of regulators talking about crypto from a distance, some of the biggest crypto and financial companies are sitting directly at the table with the people responsible for U.S. financial regulation. Reuters reports that the White House meeting comes as U.S. regulators are moving forward with plans to create a clearer framework for digital assets. That makes this meeting much more than just another political event. It could be a sign that the United States is trying to build a more formal relationship between crypto and the traditional financial system. Coinbase and Ripple are in the room. Two names that immediately stand out are Coinbase and Ripple. Coinbase is one of the largest cryptocurrency platforms in the United States. Ripple is closely associated with XRP and blockchain-based payment infrastructure. Having major crypto companies involved in discussions with regulators is significant because these companies have been directly affected by America's complicated crypto regulatory environment. For the industry, the goal is simple: clear rules. If companies know exactly what regulators expect, they can potentially invest more money, launch new products, and expand their operations inside the United States. And that could ultimately create more competition and innovation in the American digital asset industry. But it's not just crypto companies. This is perhaps the most interesting part of the meeting. The participants reportedly also include major traditional financial institutions and market infrastructure companies such as Nasdaq, NYSE, CME, and DTCC. Why does that matter? Because these companies sit much closer to the traditional financial system. Nasdaq and NYSE are major stock market venues. CME operates major derivatives markets, and DTCC plays a critical role in clearing and settlement across U.S. financial markets. So when crypto companies and traditional financial infrastructure providers are involved in the same conversation, the discussion becomes much bigger than Bitcoin or Ethereum. It becomes a discussion about how digital assets could eventually interact with the entire financial system. One area that could become particularly important is tokenization. Tokenization means representing assets such as stocks, bonds, funds, or other financial instruments as digital tokens on blockchain networks. This could potentially change how assets are issued, transferred, and settled. And that is why the presence of traditional financial institutions at this meeting is so important. Prediction markets are also a big part of this. Another major part of the meeting involves prediction markets. Companies such as Polymarket and Kalshi have become increasingly important in this area. Prediction markets allow people to trade contracts based on the outcome of future events. But these platforms have also created major regulatory questions. Who should regulate them? What types of contracts should be allowed? Where's the line between financial markets and traditional gambling? These are questions regulators are actively dealing with. And the CFTC's Innovation Advisory Committee specifically lists prediction markets among the topics for its August 20th meeting. So the White House meeting and the CFTC meeting are clearly connected. What about the Clarity Act? There's another major piece of the story. The United States Congress has been working on legislation designed to establish a clearer regulatory structure for digital assets. The so-called Clarity Act has become one of the most closely watched crypto bills in Washington. However, congressional progress has been slower than many people in the crypto industry hoped. Reuters reported that the stalled legislation has pushed more attention toward regulatory agencies such as the SEC and CFTC. This creates an important situation. If Congress takes longer to pass comprehensive legislation, regulators may continue using their existing authority to provide more clarity through rules, guidance, and regulatory actions. But there's a major limitation. Agency rules are not the same thing as permanent legislation passed by Congress. That means the crypto industry still has a strong reason to push for long-term congressional action. What could this mean for Bitcoin? Now let's talk about the crypto market. Whenever the US government becomes more supportive of digital assets, investors naturally ask one question. Could this be bullish for Bitcoin? The answer is potentially yes, but investors should remain careful. Regulatory clarity can reduce uncertainty, and lower uncertainty can make it easier for large financial institutions to participate in digital assets. If major banks, exchanges, asset managers, and financial infrastructure companies become more comfortable with blockchain technology, the amount of capital flowing into the digital asset ecosystem could potentially increase. Bitcoin could benefit from that broader institutional adoption, but this does not mean Bitcoin will automatically go up because of one White House meeting. Markets can react to many factors at the same time, including interest rates, inflation, liquidity, ETF flows, economic data, and global risk sentiment. So investors should separate the long-term regulatory story from the short-term price movement. What about XRP? XRP investors are also watching this development closely. Ripple's participation puts additional attention on the regulatory treatment of digital assets and blockchain-based payments. If the United States eventually creates clearer rules for crypto companies, projects such as Ripple could potentially operate in a more predictable environment. But again, this does not mean the government has officially approved XRP or any other specific cryptocurrency. That distinction is extremely important. A meeting with regulators is not the same thing as a regulatory approval. The bigger picture. And now we reach what may be the biggest story of all. This is not simply about Bitcoin. It is not simply about XRP. And it is not simply about crypto exchanges. The bigger question is, how will blockchain technology become part of the American financial system? The presence of companies from crypto, prediction markets, stock exchanges, derivatives markets, and clearing infrastructure suggests that the discussion is becoming much broader. The CFTC itself says its new Innovation Advisory Committee will examine crypto assets, artificial intelligence, and prediction markets. That tells us something important. Regulators are no longer looking at blockchain as a single isolated technology. They are looking at how new technologies could affect multiple parts of financial markets. What happens next? The next major event is the inaugural meeting of the CFTC Innovation Advisory Committee on August 20th. According to the official notice, the meeting is scheduled from 1 p.m. to 4 p.m. Eastern Time and will cover crypto assets, artificial intelligence, and prediction markets. That means we could hear more about the government's thinking on digital assets very soon. Investors should pay attention to any comments from SEC Chair Paul Atkins and CFTC Chair Michael Selig. They should also watch for developments involving crypto market structure, tokenization, prediction markets, and the treatment of digital assets under U.S. law. Final thoughts. So, what should we take away from this? President Trump meeting with crypto executives and major traditional financial institutions at the White House is an important signal. It shows that digital assets are becoming part of a much larger conversation about the future of finance. Coinbase, Ripple, Gemini, and other crypto companies want clearer rules. Traditional financial institutions want to understand how blockchain technology can fit into existing markets, and regulators are trying to find a balance between innovation, investor protection, and financial stability. The most important question now is not whether crypto will become part of the financial system. The bigger question is how deeply blockchain technology will become integrated into that system, and what rules will govern it. And if the United States succeeds in creating clear and workable crypto regulations, it could have a major impact not only on American companies, but on the global cryptocurrency industry. So keep watching this story, because the next few months could be extremely important for Bitcoin, XRP, crypto exchanges, tokenization, and the future of digital finance. If you found this update useful, make sure to like the video, subscribe to Shabanverse, and turn on notifications for the latest crypto and financial news. Thanks for watching, and I'll see you in the next video.